boots on the ground, put it down, get up, get up. I got something to tell you. I don't think they want you to know, but I'm going to tell you anyway. It's five-time best-selling author Mickey D. I host The Scoop. I want to thank you for joining me. It's a pleasure. It's an honor to be on your electronic device. My friends, if you're not a subscriber, go ahead and hit subscribe. We'd love to have you on board. Like, share these videos. Give me a thumbs up. Let me know you're out there. Help the algorithm. Because next week, all of these stocks are going to help the algorithm because it's going to be selling like a madman. I'm going to tell you why here in a second, my friends. You know, The Scoop is not for your education, your entertainment only. I'm not a stockbroker, not a money manager, not a financial advisor. My friends, I'm an author, researcher. Nothing I say on here should be investment advice. And let's not take it that way, my friends. Well, my friends, it was a horrible week. You know, some things kicked in. It got really nasty, but it's going to get a lot nastier. And I'm going to tell you why here in a second. My friends, but first, who's that? Christian Nibler. Christian, your information should be there. You wanted those gold baby knockouts, and your newsletter. Also, my Scoop Team private students, in your newsletter, you'll have those gold and silver plays, those gold and silver baby knockouts in there also. Also, we have junior silver mining stocks ready to explode. You guys know the books. I'll have them in the links below here, and you can take a look at that, my friends. But my friends, this weekend marks the first weekend when, if you see, you see the Qs here, right? These are the Qs. QQQ. There's the 200-day moving average. We crashed through the 200-day moving average, my friends, with the Qs. The S&P 500, right? What did we do? We did the same thing. We went through the S&P 500. The Dow, the diamonds, right through. There's the 200-day moving average, right through the 200-day moving average, my friends. Now, when was the last time the QQQs, the S&P 500, and the Dow spent time together in the same hotel under the 200-day moving average? Well, if you started trading just recently here, my friends, in the last 10 years or so, you've never seen anything like this before, my friends. My friends, it's been since like 2009 since this has happened, because there's your 200-day moving average. And it's been like free sailing, man, all the way up to now. We have not done this since that time, my friends. It's been a long, long time since we've seen carnage in the market like this, my friends, where you've got hundreds and hundreds of stocks that are going down and getting their 52-week lows. They're down below their 200-day moving averages, my friends. We have a rough time. In my last video, I asked, was there technical damage being done to our uranium stocks, my friends? And I think we got our answer, because Cameco is also going to be in the hotel, the 200-day moving average hotel. They'll be able to join with their friends, Energy Fuels, which will be spending some time also. As you can see, they're under their 200-day moving average. What about Denison? We can't leave baby knockout Denison Mines behind. It's under its 200-day moving average. What about Uranium Energy? Uranium Energy Corp, it's down below its 200-day. What about NexGen? And we can go on and on and on. NexGen is below. But guys, look at the QQQ. There's volume here. There's volume, guys. Despite we're going down on volume. So this is not something to sneeze at, guys. This is the real deal. This is the real deal. Like I said, I asked in the last video, and that is, hey, how you doing there, Tia, Lady T? I asked, was that was there technical damage being done? And yes, my friends, we all can conclude now that there was damage done this week to the charts, my friends. And all my chart guys out there, there's a lot of you out there. You're doing a fantastic job. But I like to keep it simple and just keep it nice and easy with the 200-day moving average. And when you crash through the 200-day moving average, you're in trouble. Okay? We can often hit that up there, at 50-day moving average and then balance. But let's keep it simple here. 200-day moving average, you are in hot water, especially when a lot of the stocks are doing the same thing, my friends. Yeah, we've got some catalysts coming up in uranium. We've got the, they're going to rebalance at the end of the month. We got Sprott out there. We got a potential war in the Kazatomprom area. We've got a lot of things going on there, some catalysts. But when stocks get under their 200-day moving average, Cameco, Energy Fuels, Denison Mines, Uranium Energy, NexGen, when they start doing what they do, my friends, spiders and the Dow lead the way. When they start doing this, there's a little bit of concern out there. People should have a little concern, Of course, on a lot of our stocks, we're way up. You guys have taken profits. Congratulations. You have done. But there was some resistance here just a little while ago here. There was some resistance here when, that's the 6 month. This is the day right here. This is Energy Fuels. This is UUUU, guys. And let's go out 6 months here. I did a video and I could remember saying that, hey, I was, up in this area. It's about 11. I did a video. I said, I was taking some off the table because, it was too much of my portfolio. And people say, I don't know if you should do that, Mickey D. I don't think you should sell up here, But I think that was a prudent and is a little wise decision on my part to take a little bit off the table, my friends. For the record, now that's one of my favorite stocks is Energy Fuels, and I still have a few thousand shares just for the ride. But my friends, a lot of these stocks, you have to, when you get in a stock like Denison Mines and it goes up to a couple dollars. And that's baby knockout, 25 cents or so. You guys, you have to take profits on these things. And that's one thing we do on the Scoop. We take profits. We don't care what sector it's in. Guys, when these stocks go up really high, one thing that you could do is, at least, your stop and look at it. And reevaluate and accumulate. It's a good time now to, if you're not in, if you have some extra cash, to possibly, get ready to take a look at some of these stocks. I can't tell you to buy, sell, or hold anything. That's not what we do. I'm not a stockbroker, not a money manager, not a financial advisor. So, my friends, it is a time, though, to reflect, and the algorithmic computer trading will kick in next week. And for you that have never really been part of a bear market before, I can recall the dot-coms, right? Maria Bartiromo, everybody was excited. She was on television every day. She covered the Dow. There's stock to buy. There's AOL. I made a mini living on AOL. I picked it up at a quarter. I made over 70,000%, guys, selling in and out of AOL, my friends. But it didn't go straight up. When it went up, it went very far up. But when it came down, when the dot bombs, as some people say, came down, there was a price to pay. So if you weren't out and your stock went up to $100 and you thought Enron, they were telling you, you had all the, the reports and the charts looked okay, and who's that, Anderson, that was in with them on doing the taxes and everything. I mean, they had everything together. They thought. A few of them are in jail right now, but that's what they thought. But, when they go up like that, they come down. And right now, in unison, it looks like this is the first time in 10 years that I'm not going to say they're not going to go back up and not be part of the 200-day moving average motel. I don't know how long the Dow, the S&P, and the Nasdaq are going to spend in that hotel. But it looks right now like what will happen next week, and the computer trading and all that, the high tech stuff kicks in next week, and there's all this selling, which is the possibility. I'm not saying it's going to happen. I'm just telling you there's a possibility, guys. You may want to reevaluate, reconsider what moves you're making with your portfolio, my friends. Once again, if you look in the bottom right-hand corner there, you clearly see volume on the Qs, volume on the S&P, volume on the Dow, and they're going past their 200-day moving average comfortably, my friends. Cameco, Energy Fuels, Denison, Uranium Energy, and NexGen are all right there also. They're doing the same thing. So we'll see how the week pans out. Just be careful out there, guys, because there's sharks out there circling. They're ready. There could be some blood in the streets here sooner rather than later, my friends. Some of these stocks can get extremely low. You will have another great buying opportunity. Who knows? They may go down and be baby knockouts again. Some of them, my friends, some of them. If they are, be ready. Our African uranium super trade, be ready. Our traders, be ready. All of them, be ready. Love you. God bless you. Once again, give me a thumbs up. Let me know you're out there. Help the algorithm. Help the channel, my friends. Love you. God bless you. Take care of you and your family. Have a great, great trading week coming up. But be very, very careful.